It finally happened. We got our CPI report for the month of March. Now, while everything looked decently good in terms of what expectations were, we really need to talk about this a little bit more, because the reality is, in my personal opinion, everything is looking bad, especially as the war in Iran continues on and on and on, and we can't seem to find a ceasefire in sight. So if we're talking in terms of expectations, things actually looked pretty good, right? We got 3.3% overall CPI with a 3.4% expectation, and then a 2.6% core CPI with a 2.7% expectation. So overall, in those regards, we're 0.1% below what was expected. However, what we have to keep in mind is, just a month ago, our year-over-year inflation from February was 2.4%. So we have just jumped almost a full percent as it relates to the oil crisis in Iran. And in my personal opinion, guys, this is bad, because inflation is up almost a full percent, while unemployment for really the past year hasn't budged much, except for within like 0.3%. And yeah, it's been going up over the past number of years, but again, we're still at about 4.3, 4.4%, somewhere in that ballpark. So if unemployment is staying the same and inflation is skyrocketing, what do you think that signals for the Fed to do? And also keep in mind, we have to think of this in terms of what Jerome Powell and the Fed board is thinking, not necessarily what we think, right? And what they're thinking right now is that the unemployment staying relatively where it is, but sort of going up, but job creation being very, very low, is mostly attributed to immigration policy. So this is a net zero for Americans overall. And really, if inflation is going up and unemployment's about where it was, yikes. Rate hikes could very well be in our future. Now, look, I know Jerome Powell doesn't want to be political, but considering Trump's influence right now, I do find it maybe unlikely that we would actually get a rate hike. But to me, this sort of report pretty much solidifies for the time being that rates are definitely not going down, and we may get a hike, if anything at all. And just as a reminder, when rates go up, it makes bonds and treasuries more attractive. So people are less likely to invest in high-risk assets. And oftentimes we even see people pull out of those kinds of things. So ultimately, this is why hypothetically it would be bad for Bitcoin. Now, with that being said, you could potentially make an argument that longer term inflation going up does raise the price of assets such as crypto and stocks. So maybe in a longer term situation, the price does ultimately go up. There is some debate to be said there, but ultimately this has been the historical pattern. Not only that, but you have to remember the yen carry trade is still unwinding, and yields for Japanese bonds just hit an all-time high for this century. That's crazy. And just in case you forgot, it's been a while